Hey Rick, thanks for joining me here at APMEX. Welcome to have you out.
Pleasure, Ken. Thank you for having me.
So we walked around a little bit. You got to see our operation. Any initial thoughts?
Oh, very impressive. I think it's ironic, amusing, in fact, that a big precious metals dealer is housed in a former Federal Reserve facility. I understood when I saw the extent of your vaulting and security arrangements why you chose this building. And of course, if the business that you do is more like ours, more like paper, the complexity of 20,000 physical products is amusing and impressive. We're at Sprott delighted to be partners with you in OneGold. We feel like we've found very good partners, and certainly this visit to Oklahoma City confirms that for me.
Oh, thanks for coming out. Yeah, the operation is something we've worked on for years to build. As you know, APMEX has been in business for 20 years now. It doesn't happen overnight. The facility is unique for our business. It's great to see a former Federal Reserve building doing what it did back in the day when it was originally built.
Well, I'd say, in fact, that your business is probably defending your customers from what the Federal Reserve currently does. So I'm delighted to see a facility recycled into a higher and better use.
Yeah, no doubt, no doubt. Hey, Rick, obviously our partnership has come full circle. We're working on a great digital product called OneGold. It's something we're super proud of. It's really making precious metals investments available to the masses. And one of the things we do there through that is obviously an online platform through an app environment, desktop environment, where people could procure metal at institutional pricing with a matter of a couple clicks on a phone. It allows you to do things like link your bank account, make reoccurring transactions, and frankly, be able to take your money out and in as fast as you want to at a moment's notice. As you look at our platform, obviously we have a few products on there, gold and silver. We store it in the U.S. and Canada. Any advice you give anybody out there who's looking in terms of what products they might want to invest in on the platform?
That's too broad a question probably to cover in the space of time that we could have available.
Yeah.
It's Sprott's point of view, but also my personal point of view, that any investor, irrespective of age, with means, should own physical gold and silver.
No doubt.
Physical gold and silver, physical gold in particular, has proven to be an insurance product over time. Mm-hmm. And while nobody of any age, of any wealth, wants to collect on any insurance product, I mean, if you think about it, life insurance means somebody died. Right. The fact is that you do better in time. You sleep nights, stay calm, and in fact probably are a better investor over time if you have an allocation to physical precious metals in a portfolio. What has been interesting to Sprott about OneGold is that we know we have to meet the customer where the customer is, and the younger customer is online. Right. The younger customer doesn't want to have to go to a coin dealer. The younger customer doesn't want to have to go to a bank. Mm-hmm. The idea that we can make gold and silver ownership and transferal convenient while we take costs out of the holding and transferal system is really what has attracted us to OneGold, and the reason why I'm here today.
Well, Rick, one of the things obviously we thought was very important in the OneGold platform was to make sure people knew their metal was always there, that they could trust who they're doing business with, that their counterparty risks were minimized, that they had title to product, that they're fully protected at all times. It's something we put a lot of effort and energy into. Any concerns when you think about investing in the broader scheme of things? How do you make sure you're always protected as an investor?
Well, certainly from Sprott's point of view, the fact that APMEX had simply been in business for so long, had been profitable through that whole length of time, made you a trusted counterparty to us. Certainly at my age, having been through the decade of the 70s and watched so many of the gold and silver scams that took place, where people bought gold and silver because they were not trusting their government, and then found that where they stored their gold and silver also wasn't trustworthy, has been and continues to be, I think, a concern of precious metals investors. One of the lovely things that people have access to now is a whole bunch of peer-reviewed information available on the web.
Right.
Researching Sprott, researching OneGold means that people are able to get good information from disintermediated sources, and certainly that was part of the due diligence that Sprott did on APMEX and made us feel better about it. Of course, coming here and seeing a facility with 3-foot thick walls, armed security guards, and actually seeing the OneGold inventory, despite my tradition of trust, was reassuring.
Yeah, that's great points. That's great points. One of the things that we have worked long and hard on is to make the consumer experience an easy one. You talked earlier about disintermediation and trying to make it easier for consumers to be able to get in and out of metal. One of the things we've tried to do is make the consumer experience easy and straightforward and transparent, and answer all their questions on the front end as much as we can. Any initial feedback on that as you've looked at our platform?
Well, I'll give you an anecdote that'll make you laugh, actually. When I was doing my own sort of due diligence on OneGold, a younger person in our organization who, let's just say, is more familiar with technology, was able to show me how your app worked on a phone. And if a 67-year-old inadvertent Luddite like me can make it work, you have truly succeeded in democratizing gold ownership and transferal. Congratulations for that. I use myself as the sort of lowest common denominator client.
That's fantastic. One of the things we've seen is, and you mentioned review feedback and being able to go online and research the customer or research the company you're doing business with. We got over 1,500 reviews already on the OneGold platform. We have a 4.8 out of 5. We've got over 65,000 reviews on APMEX, and it's at a 4.9. It means we're taking care of the customer. And one of the things we think is very, very important, any company you do business with, is knowing that you're going to be put first throughout the entire process. As we've seen the industry change and we've seen many companies struggle, I think you'd agree with me that needs to always remain the top priority of a company.
Absolutely. And in fact, one of the lovely things about this online approach is that your reputation can be verified independently from thousands of sources, as you've been able to do. This is one of the great benefits of moving more and more of the financial services industry online, this sort of peer-reviewed performance. I'm not good because I say I'm good. I'm good because thousands of my customers say I'm good.
That's a fantastic point. So Rick, I've got twin boys. They're about to graduate college here soon. Naturally, I like to give my kids advice on investments, to think about it at a young age. Is there anything you would share with my children as they start out in the professional world and how to think about retirement planning and thinking about it early?
I've thought about this a lot. I do, as you may know, a lot of youth mentoring. It's one of my philanthropic activities. And separate and apart from that, obviously the millennials are the future of our business. Talking to the millennials, I think, is important. Your kids grew up in one of the most benign investment climates on the planet.
That's a good point.
The market went up, interest rates went down, property went up. If you basically were able to walk and chew gum and stayed in the market, you did okay. Mm-hmm. But my suspicion is that the future, while still bright, is going to be somewhat less benign. And I think, unfortunately, what you and I, more my generation than your generation, has done to our kids is substantially less benign. Well, the kids react to narrative. We have to teach them some arithmetic. And the arithmetic goes like this. At the federal level, on balance sheet, our obligations exceed $22 trillion. Off balance sheet, by the way, off balance sheet obligations, your viewers are looking at them. I'm 67 years old. Medicare, Medicaid,
right.
All these things. Those liabilities are $100 trillion. Now, when I say trillion to audiences, their eyes glaze over. They don't know what a trillion is. It's a boring concept because they can't recognize it. Well, it's 12 zeros to begin with. Yeah. The point of all this is that federally, we owe each other $120 trillion. That's the debt. How are we going to pay the debt off? Well, this is another problem. The budget, our national income, taxes and fees less expenses, are $1 trillion a year upside down, right. Meaning that we aren't paying it down, we're actually building the debt up. Young people need to think this. How do you add a column of negative numbers and come up with a positive sum? And they need to understand that while we're leaving them, in many ways, a good world, the other thing that we're leaving them is a $120 trillion bill for benefits that we voted for each other, but we're leaving them the bill. Historically, over time, when societies have become indebted like this, there's two ways out. There's a good, honest default, where the government says to the bondholders, too bad, so sad, we're not going to pay. And where they say, the young generation says to old generation, like me, well, you voted yourself all these benefits, you pay for them. But that isn't what happens politically. Politically, what happens is that you lessen the value of the obligation. In other words, you lessen the net present value of the currency. The reason I say this is not necessarily just to criticize government, but rather to say over 3,000 years, the best form of insurance against the depreciation of a currency by society has been gold. And the need today is as great as it's ever been.
So if you were a young man, 22 years old, 25 years old, and you were looking to start your investments, and you had $100 to put away a week, how do you think an individual should go about gold in terms of ratios or views, or is that just too generic of a question?
No, I don't think it's too generic. I think partially it depends on the subject's means and how much risk he or she is willing to take.
Right.
But I believe, as a sort of a rule of thumb in systematic savings, that 10% is probably an adequate allocation to gold. There are some people who are more aggressive and hence need to own less gold. From my own point of view, it's interesting. I don't want anybody to conflate me with a 20-year-old, which is probably not going to happen. But the truth is, when you think about the fact that I'm an example, the largest shareholder of Sprott, my life is wrapped around gold, but I still own a lot of gold. And I own gold because I like to be liquid. I know that during tough times, if I have liquidity, that I can take advantage of the situation rather than being taken advantage of. Gold and cash helps me sleep nights and stay calm. And I suspect that a 20-year-old today, assuming that 20-year-old lives to be, let's say 80 or 90, he or she will experience 6 or 7 or 8 liquidity crises, market declines in his or her career. If you have liquidity, particularly if you have good liquidity, physical precious metals, you take advantage of the situation rather than being taken advantage of.
Right, good points. One of the things that I've always looked at is what you have kind of off the grid, what you have, if you will, that you can touch. And I've always found, as I'm getting older, wealth preservation becomes more important to me. As you think about having assets offline, what are your views on that? Is it something where your personal opinion is you don't keep it in the home necessarily? Do you feel like you keep it in a third-party holding facility? Do you feel you just better to own another option out there? What's your view on that?
This is my personal opinion, not the Sprott opinion. I have a lot of clients who have engaged in what I call midnight gardening. Which is taking the physical home. I don't recommend that.
Yeah.
I have a friend and a client, 2 different people, who, as a consequence of having physical precious metals at home, have been visited by people that you and I wouldn't invite to lunch.
Right.
And I think that you substitute one set of risks for a very different set of risks. So my own, I'm not speaking on behalf of OneGold or Sprott, I'm speaking on behalf of Rick Rule. My preference for my friends and customers that own physical precious metals is that they eliminate that risk by storing it somewhere. Your facility downstairs with all the security you have in place and 3-foot thick doors seems like a good idea to me.
Yeah, one of the things we've rolled out, it's been probably 8-9 years ago, is an arrangement with Brinks where we actually offer storage to our clients where they can store their eagles, their maples, and bars. And actually we bill them a small storage fee, but you get insurance, you get protection, you get peace of mind knowing that metal is going to be there.
Certainly I have clients that really want to be offline. They want their own physical precious metals. And when I talk to them, they say, thank you for my opinion, I'll do it my way, which is fine too. You just asked me.
Right. Well, look, we're one of the largest physical metal dealers in the world.
Right.
And we find most of our clients actually prefer to have it come to their home.
Right.
Now, how they store it in their home, would they have safes or do other things with it is really their discretion.
Sure.
But we do find a lot of people do like that. And I think some of the reasons why they like that is they look at it as ways to kind of know they have assets that others aren't aware of necessarily, or a way to pass on inheritance within their family, or just a way to kind of manage their net worth in a more conservative fashion. So I think it really depends on the individual. I think you would agree on what works best for them.
I would, Ken. I would say that I'm sympathetic to home storage and empathetic to secure storage.
Yeah, good points. One of the things I've been thinking a lot about is where precious metals fits in the fold, right? And you can go out and look at it from a diversification standpoint. You can go out and look at it from interest rates and are they attractive for investments today. You can go out and look at it from concerns about the dollar being printed at all-time high rates. But at the end of the day, it seems like any way you look at it, it seems positive in having some exposure to precious metals in your portfolio any way you slice it.
Well, I think that's accurate, irrespective of your outlook. But I think particularly in the context of people examining the way they feel today relative, if they're older, to the way they felt in the decade of the 70s.
Yeah.
Or the way they felt in the tech wreck of 2000. Or if they're old enough, how they felt in 2007. During periods of time of instability, during periods of time when your confidence gets challenged, gold traditionally has done very, very well.
Yeah, we were looking at 2007 and 2008 recently and looking what the equities markets did on the pullback and just how well precious metals performed.
Yeah.
And it just reminds you that it acts as a hedge, a natural hedge to equities.
It's important to note that in a very sharp, liquidity-driven decline like 2008, gold sells off too.
Yeah.
Because the liquidation decision isn't made by the investor, it's made by the margin clerk. But it also comes back more quickly. People who were prudent, who went into the circumstance with liquidity, who are looking to park surplus cash into an asset that will sustain and support their purchasing power. During periods of trust, people go into gold. Remember, and I know you remember because you sell it every day, gold is a medium of exchange and a store of value simultaneously. A dollar is a promise to pay. Gold is in fact payment. You don't have to trust anybody because it is payment. It's not a promise to pay. And in the aftermath of liquidity-driven circumstances, demand for gold is very high for just that reason. You don't have to trust anybody.
Right, yeah. And one of the things we've seen in our business is, obviously with the equities markets doing very well, consumption of physical metal is not quite as high. But we've seen ETF flows in the past year actually be at very high levels, I think even dating back several years in terms of the amount of inflow. Why do you view inflows into ETFs when the physical demand side hasn't quite kept up quite yet?
I think a lot of people are holding physical assets now in system. Wall Street is very good at monetizing demand, and Wall Street has figured out that there is demand for physical precious metals, and the fact that somebody can go to Merrill Lynch or Schwab and hold their precious metals in the same place that they hold their equities and their bonds has made life very easy. Now, I'll share an interesting statistic with you about that, and I forget what bank published this, but fairly recently I read that precious metals and precious metal securities nationwide comprise between 1/3 and 1/2 of 1% of investment and savings assets in the United States. If you go back to 1981, which was the peak of gold demand, as I understand it, precious metals and precious metals related investments had a 7% market share in savings and investment nationwide. And the 3-decade median is between 2 and 2.5%. Now, I'm not one of these who suggests that gold is going to supplant the US dollar as a medium of exchange. I don't think gold's going to win the war against the dollar. But I bet you it's going to lose it less badly. My belief is, in terms of things like the ETFs and the precious and the whole panoply of precious metals investments, that gold demand, precious metals and precious metals assets demand in the United States will go from its current level, less than 1/2 of 1%, to its 30-year mean, which is 2%. Mean reversion generates a 4-fold increase in market share for precious metals and precious metals related asset in the largest investment economy in the world. And that's what I think is going to happen.
So Rick, look, you've kind of progressed in your career. You're in your 40s, 50s, early 50s. You've got a net worth that you really feel proud of. You're confident in that, in your ability to earn more income over time. You're looking to invest. How does a person approach investments, at that point in their life, from your perspective?
Partly it's a function of the rest of your portfolio. As an example, to the extent that someone's savings was largely in long-term bonds, which can get massacred by inflation, then you have a higher proportion of gold ownership. As one ages, as one becomes wealthier, as one becomes more financially secure, the need for insurance remains. In fact, you find that people buy other types of insurance in increasing amounts as the insurance becomes affordable. The second thing that happens is the function of precious metals within your account goes from being merely insurance and liquidity, which it was when you were young, to being an investment and even a speculative asset.
Right.
The bedrock, of course, is physical gold.
Right.
But as one ages and you're looking for investment performance, in down markets, physical silver over time outperforms physical gold. It's more volatile, so it becomes a speculative asset. The second thing that can occur is at that point in time, it becomes efficacious to invest. Buying very, very, very high quality precious metals mining shares as an example, or with more speculative money, silver, high quality silver mining shares. So as your means progress, the way that you consume precious metals grows. But it doesn't change. The truth is, ultimately, that insurance stays an important part of a prudent portfolio throughout one's life.
Yeah, no, one of the things that I focused on more recently is thinking more about wealth preservation rather than necessarily wealth gaining or growing the wealth. And you think differently sometimes, a little bit about that. And I think some of the aspects of how you would invest in metals is a good example of that. Maybe how much cash you're willing to have, maybe how much real estate you want to hold in terms of your portfolio. You start to move your assets around to be, in many views, more conservative in some natures, just because you're trying to preserve wealth and not see that it, in a down market, could disappear so dramatically.
You make a good point. One of the interesting things about gold is the price volatility in gold actually makes it a fairly efficient form of insurance. If you look at the decade 2000 to 2010, at the beginning of the decade, confidence in the economy was extraordinarily high, and gold sold for $250 an ounce. Someone who would have put, say, 10% of their net worth in gold would have seen six-fold appreciation over the course of the decade. Right. The equity markets did well, but let's assume for a second that the equity markets didn't do well. Right. Let's assume that that decade looked like the decade, of the 1970s, where common stocks fell by 25%. The truth is that a small holding in gold, 10% of one's portfolio, would have more than hedged out all of the losses that they expose themselves to in other parts of their portfolio. That's really the beauty of gold. When times get tough, right, a little bit of gold goes a very, very, very long way. That isn't to say that people who have an opinion about price need to use it just as insurance, because certainly six-fold appreciation made it a very good investment asset too.
Right. Yeah, I've always quoted this. Actually, I think I used a 20-year horizon. You used a 10. But 2000 to 2020, it's the second best performing asset class that you could have been in, even outperforming the S&P 500. So sometimes people think gold is a safe haven or a conservative investment. The reality is it's actually performed very well over the last 20 years.
Right. If one wants it as an investment class, one must have very, very, very long time horizons.
Correct.
Perhaps I'm talking as a person who's been successful in several businesses. So from my own personal point of view, the way I sell it well, I regard it as an insurance class, but certainly what you say is true.
Well, I think your length of time of ownership is a very good point as well. I think people who tend to get into metals tend to be into them for a longer period of time. They're not looking to be in and out and in and out like you might find in equities, because frankly, they're thinking for the long term. And gold today is going to be a good investment 10 years from now like it is today.
That's my personal belief. As I say, I regard it as an insurance class, but I understand what you say.
Yeah. And do you have any views that the scarcity of gold, that the amount of mining being done in today's world and the availability of gold, when we think about as demand starts to resume itself for gold at levels like we've seen in previous days, what's your view on what that does to the price of gold?
Well, I'm a believer that markets work. I'm a believer that price will take care of scarcity. Yeah. It might take care of scarcity at a very, very, very different level. If you think about a circumstance, going back to the earlier question, where gold would go from 0.5% of the savings matrix in the United States to 2%, in other words, where you would quadruple demand for gold. The gold will be there. Remember that almost all the gold that's ever been mined is still physical gold. Right. So the gold will be there, but the price might be different. The price denominated in dollars.
Right. Well, it seems like there's a lot of upside on the price is where I was going. Mm-hmm. Obviously, if demand were to pick up to levels like we've seen in the past, with the amount of individuals out there with dollars to invest, it seems like it's a great opportunity for price appreciation in the gold space over the long term.
That's what I think investors need to wrap their heads around. Investors need to wrap their heads around how small an asset class it is and how it has been efficacious, hate to use those big words, but efficacious over time as a savings and investment product. And it doesn't mean that you have to return to a gold standard. It doesn't mean that we have to go into the Greater Depression. It doesn't mean that we have to have a Holocaust. The only thing that has to happen is that people have to be a little less confident than they are today. Explaining how that would occur would be defaulting to the arithmetic and away from the narrative. And you've answered that question. And gold could do very well. At the very least, it could protect your family's purchasing power, which is what it's designed to do.
You know, one of the things we talked about at lunch today was the upside versus the downside risk of something like gold. You know, you look at where pricing is today, you look at where it is historically, you look at where, you know, only a certain amount of gold is coming out of the ground at any given year and where mining is on that stage. It seems to me like gold has a far lower downside and a much greater upside. Any views on that?
Ken, you're going to hate this answer. Pray for a downside. I mean, a downside means that no insurable event occurred.
Yeah.
Wouldn't it be great if your kids had life insurance on you and they never got paid?
Great point.
Which meant that your great-great-great-grandchildren could enjoy your company. Think of automobile insurance that you never collected on, which meant you never had a wreck. Think of insurance on your house that you never collected on, you never had a fire. I own a lot of gold. And I hope the stuff goes to $400 or $500 an ounce. What it means is that everything else in my life turned out fine. Yeah. By the way, I don't think that's going to happen. Yeah. But when you talk about the upside in gold, I always tell my clients, be very cautious what you think about. That set of circumstances that could cause gold to go to $5,000 an ounce or $12,000 an ounce, while they're certainly identifiable circumstances, they're uniformly unpleasant.
Well, I think your point is well taken. You know, as an insurance policy, gold does this job, right? So if the markets are killing it, and we're all making great money in the equities markets, and real estate's booming, and interest rates stay low, and everything's going hunky-dory, then naturally we're going to be feeling pretty good about our situation. But the reality is, having insurance for the case or situation where that doesn't occur is a smart play for any investor.
My belief, everybody needs to default to a different downside. That is the downside associated with $120 trillion of debt at the federal level. People avoid it because people don't want to think about bad things. People say, like smarter people than me don't care about this because the S&P goes up. It does. It goes up until it doesn't go up.
Right.
You know, our last president said the debt didn't matter because we owe it to each other. Well, that's wrong. The spenders owe it to the savers.
Yeah.
In a democracy, of course, the spenders are more numerous than the savers, and so the spenders always vote to penalize the savers. There's this great libertarian saying that says an election is where 4 coyotes and a lamb vote on the lunch menu. And the savers, who are the lambs, are precisely the people who need to own gold, as, if you will, coyote insurance.
Fantastic, great point. You know, one of the things we talked about at lunch today was the upside versus the downside risk of something like gold. You know, you look at where pricing is today, you look at where it is historically, you look at where, you know, only a certain amount of gold is coming out of the ground at any given year and where mining is on that stage. It seems to me like gold has a far lower downside and a much greater upside. Any views on that?
Ken, you're going to hate this answer. Pray for a downside. I mean, a downside means that no insurable event occurred.
Yeah.
Wouldn't it be great if your kids had life insurance on you and they never got paid?
Great point.
Which meant that your great-great-great-grandchildren could enjoy your company. Think of automobile insurance that you never collected on, which meant you never had a wreck. Think of insurance on your house that you never collected on, you never had a fire. I own a lot of gold. And I hope the stuff goes to $400 or $500 an ounce. What it means is that everything else in my life turned out fine. Yeah. By the way, I don't think that's going to happen. But when you talk about the upside in gold, I always tell my clients, be very cautious what you think about. That set of circumstances that could cause gold to go to $5,000 an ounce or $12,000 an ounce, while they're certainly identifiable circumstances, they're uniformly unpleasant.
Why should investors own precious metals?
As insurance, and during periods of time when the price feels depressed, for price appreciation.
Yeah.
It's worked for 2,000 years. My suspicion is it'll work for a while longer.
Should everyone invest in precious metals?
Everyone should invest in precious metals. The amount that you invest or the form that you invest in changes over time with your age and your means.
So why do high net worth individuals buy silver or gold? Why do they generally go into gold and silver? You always hear about them being at a higher rate into gold and silver. Any reason why you feel that is?
I think wealthy people have better access to information. I think that's how they got wealthy. All the wealthy people that I know read history, and gold does well in history. But wealthy people also have more to protect. Perhaps they became wealthy by being prudent when other people were less prudent.
That's a great point. That's a great point. Why is gold considered an effective hedge in the world today?
History. Gold is unique in that it's a widely accepted medium of exchange, but it's also a store of value. It isn't fiat. It can't be created with a keystroke.
Right.
It isn't a promise to pay. It's simply payment. You want a short answer, but I'm going to give you a long answer. The customer base at Sprott that I don't have to educate about gold are historically, as an example, Jewish people whose parents experienced Auschwitz. They're Vietnamese boat people. They're Palestinians who were thrown out of Israel. People who, in their experience or their culture's experience, have experienced trauma are not people who require a long-winded lecture from Rick about the efficacy of precious metals. No,
that's a great point. It's a great point. One of the things we've talked about is in different cultures around the world, they treat gold differently. The amount that they consume per GDP is a lot different than the U.S. Any additional views on that?
Well, first of all, when you talk about the efficacy of gold, the fact is that it has evolved as a medium of exchange and a store of value in different cultures at different times is interesting. It evolved in South Asia, in East Asia, in Africa, in Mesoamerica, and in Europe. The appeal of gold is, in fact, universal. It's beautiful, it's malleable, it's divisible, it's indestructible. Aristotle talked about why it became money. You don't require Sprott in order to tell you about that. But I think the differences of appeal in gold in different markets around the world has to do with the needs and the means. As an example, I have a good friend still, a client, who escaped from Vietnam on a boat. And he told me that at one point in time there were people in Vietnam who believed in gold and people who didn't. And he said you could segregate them because those who did believe in gold got out. He said now all Vietnamese believe in gold. His lesson with regards to gold was certainly more stark than anything that I hope that you or I ever endure. But when we talk about the uses of gold and the differences in attitude towards both gold and silver around the world, it has a lot to do with individual circumstances. Of course, through South Asia, India, Pakistan, Bangladesh, Sri Lanka, gold has traditionally been a form of savings. One of my Indian employees, when I asked him about that, said, well, we have much longer experience with government than you people do. We have never assumed in India that the government is our friend, ever. And we didn't trust pounds, sterling, and we don't trust rupiah. The truth is, in India, if you're wealthy, you store your wealth in gold, and if you're not wealthy, you store your wealth in silver. You and I, mercifully, haven't had circumstances in our life where our responses to our investments had to be that stark.
Right, and I think one of the things I've even seen more recently is currency fluctuations and individuals finding that their own country currency is not worth 3 days later anywhere near what it was worth 3 days prior, and that holding something in an asset like gold, a storage of value, if you will, has also become more real for people with currencies that are fluctuating so dramatically.
I think that's true. For the last 30 years, the store of value for people in other currencies has been the U.S. dollar. It's interesting to see gold do well, not merely in pesos or in rupiah, but also in U.S. dollars. The fact is that I suspect that gold is beginning to, and when I say gold, I mean it as a euphemism for precious metals, that gold, and I'm not saying it's going to supplant the U.S. dollar, but I think it's interesting to see it accompany the U.S. dollar during a period of time of U.S. dollar strength.
Well, I've even seen in the last year, many central banks have started to diversify away from the U.S. dollar and into metals. As a matter of fact, I think the consumption of world banks in the last 12 to 18 months is at levels not seen in 7 or 8 years. And a lot of people attest that to diversifying away from a dependency on the U.S. And the dollars more specifically. Any thoughts on that?
I think it may also have to do with the extraterritorial sense of the U.S. government. The U.S. government has begun to use its currency as a weapon to enforce its will on people in other places. And some of those people in some of those other places, Russia, China, India, Iran, but also some less challenging places, have come to decide that they'd rather run their own countries than have the president or Congress run those countries. And their ability to do it when we control the world's reserve currency has given them no choice. It's interesting when you say that. Sprott has an Asian parastatal that is a client, and I won't go deeper than that. But I noticed that among their investment holdings was a very, very, very large holding in U.S. Treasuries. And I said, so this holding of U.S. Treasuries suggests that you trust us. And he said, you know, not really. It's just that we trust you more than we trust each other. And as the U.S. becomes seen around the world as being less trustworthy, as we do less to solidify the franchise of the U.S. dollar as being an impartial medium of exchange, what we do as a country inadvertently is that we promote a more stable medium of exchange, which is gold.
So Rick, what drives the price of gold and silver in today's markets?
In my experience, which is to say historically, gold moves first, and gold moves on fear. Because gold is so volatile, the fear buyer takes it to price level so quickly that the greed buyer steps in. And there's this staccato back and forth between greed and fear. Yeah. Silver moves later. Silver is the poor man's gold. So after gold has moved, silver responds. But because of its greater volatility and lower unit cost, it usually moves further. We suggest that gold is an insurance asset and silver is a speculative asset, and that customers treat them that way.
That's a good point. Rick, compare today's demand for metal compared to history.
Precious metals related assets comprise less than 1/2% of investment and savings assets in the United States, compared to a historic 3-decade mean of between 2 and 2.5%. Right. If we had a reversion to mean, you would increase demand fourfold.
Right. Amazing. So Rick, dollar cost averaging. It's something I've heard about ever since I was in college. Of course, I didn't practice it very well when I was younger. It's something I try to drive home to my kids. But what's your view on dollar cost averaging, and how should people think about making investments?
Useful technique. What I encourage young people in particular to do is save.
Yeah.
Save 10% pre-tax of every paycheck before you buy your Starbucks. Save.
Yeah.
And some proportion of that savings should probably be in gold. That de facto becomes dollar cost averaging. The important thing isn't dollar cost averaging, though. It's saving.
Right.
To employ capital in the world, and we live in a capitalist society, you have to have some capital.
Yeah.
Save.
Yeah. No, I agree. And one of the things that I was looking at, I actually talked to my children about this recently, was setting up a process and almost forgetting about it. Example could be a 401k. Example could be setting up auto repeat investments. Any view on that? Just to kind of get your body in the motion of doing it, and then letting it go, and then of course revisiting it once a year or more frequently if needed.
Certainly, if that's what it takes.
Yeah.
The important thing is to save and to think about how your money is going to work for you. So dollar cost averaging, sure. Robo investing, sure.
Right.
Whatever it takes for you is what's important.
One of the things that we're proud of on the OneGold platform, and you can only do this in the digital space, not so much as easy to do in the physical space, is we give consumers the ability to come onto our platform, decide they want to buy $50 in gold every month, set it up, set the end date from when they want that to end, let the funds automatically pull in from the bank account, and you're done. And the concept being that you'll accumulate some assets, some savings in gold, and the reception rate on that has been remarkable. 65% of all of our transactions are auto invest transactions. They're dollar cost averaging, and they're forgetting about it, which I think is a wise decision on our consumers' parts.
Absolutely. I actually think you're doing a public service. I'm not trying to say you aren't getting paid for it. But the fact that you are making a function easy that otherwise might be lost to procrastination is a wonderful thing.
Rick, one of the things we've talked about is the barriers of entry into metal, right? How easy or hard it is to get into metal. One of the things we're proud of at OneGold that we're trying to do is to make it simple, to make it easy, to make it straightforward, to make it transparent. Any views on your experience in investing in metal and how to make it simple for consumers?
Markets work. You are an example of disintermediating historic providers that were very inefficient. Right. I think it's wonderful. I have a high degree of confidence that OneGold isn't what it will ultimately be. Right. That you'll make it a little bit better every year. The market will demand it of you, and the fact that you've been successful so far suggests that you'll succeed in the future.
No, that's a great point. And I think staying committed to the consumer, keeping it simple, keeping it attractive for consumers in terms of features are the keys to being relevant in today's society with any fintech type investment you're doing today.
Correct. The fact that you guys created a phone app that a 67-year-old Luddite can make work is testimony to the technology you've created. It's great.
Thank you. So Rick, there's multiple ways of owning precious metals. I'd like to kind of walk through each one of these. And if you can give us your view on the process, maybe some pros and cons of each one of them, it'd be very helpful to our customers. So let's start with the old school way, physical, right? Physical's been around forever. What's the pros, cons, ways you go about owning physical today?
Well, the basis is physical. That's where everybody should start. And the way that people own it is of less interest to me. If they own it absolutely as physical, that's fine. If they own it as a physical ETF or if they own it as a trust, if they own certificated gold, that's fine with me too. That's where you start. When you move beyond insurance to investing, traditionally, one then invests in the very finest of the gold stocks. Companies that are chosen because of durability of free cash flow margins, the way you would buy any other stock. Right. And then, of course, there are the speculators who want to be in the junior mining stocks or in the very volatile instruments like the high-quality silver stocks. There are also, of course, instruments for equities like the ETFs and the funds. Right. Those have places too. That's really up to the investor. If they want the diversity of an ETF or the diversity of a managed fund, they have to understand that they pay a fee for that, which may or may not seem worth the fee to them.
That's a good point. One of the things that we've heard from customers is some like to control their own destiny. They like to be able to go on to their brokerage account or onto an APMEX.com or onto even OneGold today. But then some like to have advisors. Any view as to which is the right approach for a consumer?
I don't think so. I think that depends on your point in time in life.
Good point.
I encourage investors when they're young to have more control over their assets, not as an end in itself, but rather as a means of education. Yeah. One of the things that's happened to me later in life is that in some of the asset classes I own, I'm thinking of agricultural real estate as an example, I prefer to have an advisor because I don't want to stretch fence and I don't want to lease land to a farmer. I want somebody to do that for me. I have a day job and it's a pretty good job. One of the things that happens to you as you get older and wealthier and deeper in your own career, you find out that managing certain aspects of your financial career take so much time and effort that they make you less good at what you did to generate the wealth. But it's really an individual question.
Right, no, that's a great point. That's a great point. So, Rick, obviously metals ownership can be done different ways. I've talked to consumers a lot about owning an ETF, owning physical, and owning digital. And I purposely, by the way, leave out crypto, because I think crypto is something that we should all steer clear of in the short term for obvious reasons, but we won't go there. Let's talk about ETFs. Obviously, Sprott has several ETFs. What's the pros and cons of an ETF for a consumer?
Are you talking about an equity ETF or a gold ETF, a physical ETF?
Physical ETF.
The physical ETFs, the benefit of them is they are extremely liquid and a very low fee product.
Absolutely.
The traditional knock against the physical ETF has to do with the fact that in terms of accommodating the pinches and swells of assets every day, at some point in time, the ETF holder may have substantial deposit receipts rather than physical precious metals. If that circumstances occurred concurrent with a liquidity squeeze like 2008, the ETF holder may find himself or herself to be an unsecured creditor of the holding bank. My own personal belief is that the real risk of that is quite low.
Right.
But I have some customers for whom the concept of taking any risk whatsoever in their gold portfolio is unacceptable. Those people should avoid the ETFs.
And I think there's also ongoing fees. There's tight spreads, which is the nice thing about an ETF.
Right.
But there's also an ongoing expense you have to pay for storage. Again, relatively fair, if you ask me.
Yep.
Very similar, actually lower than most mutual funds, but it's something you also have to factor into the cost of ownership as well.
Certainly. Any time that you make ownership of an asset convenient, you pay for it.
Yeah, no doubt.
And nothing's free. I think the physical ETFs are good products for the right investors.
I agree. Let's talk about owning physical. Actual physical where it's metal in your home, or you can put it in storage. But the concept that you're getting a gold eagle, a silver eagle, a bar, it's actual physical metal. It's been fabricated. What are the pros and cons of that asset class, or that ownership type? I'm sorry.
Personally, I don't like coins because I don't want to pay even a small premium for minting. I own larger denomination bullion myself because I'm a cheapskate. We've talked about home storage before. I understand that some customers want to pet their metal. I get that. I'm nervous about the security aspects of that. So I personally would prefer a vaulting relationship where you trusted both the vault and the intermediary.
Right. Obviously, being a large seller of physical precious metals, one thing I would say back to your comment earlier about low premiums is spreads is something people should pay attention to. When they're buying a physical metal, they need to understand what the two-way market is in physical. Oftentimes they'll find, and it's the data proves this, I believe, if people do the research, that a lot of times buying a sovereign coin may have a smaller spread than buying a silver bar. It just depends. But depending on the markets, and the markets I'm familiar with, you tend to find tighter spreads. But the reality, though, is that spread's still going to be much larger than an ETF. Is that true?
Yes. And the truth, too, Ken, my associate Jeff Howard has talked to me about this. Given the length of time that I have owned my bullion, the markup between the bullion and the coins doesn't even exist, except that it goes against my sort of cheapskate nature.
I think that's great. Well, and obviously, smaller premiums allow you to get more gold and more silver. So there's still valid points to that, right? And then finally, I'll talk a little bit about digital, right? Digital is this new thing. There's a couple of products out in the market today. You have a product like OneGold as well out there. I think the keys or the principles are still true, just like a gold-backed ETF. You got metal, it's always under lock and key, it's audited, it's insured, you're protected, you have title, you shouldn't have any intermediary risk, you should be good to go. But the beauty of it is you can trade it real time, just like you can in ETF. A little bit wider spread, a little bit lighter storage fee, but you have the ability to do things like redemption on the fly. You have the ability to do things like link your bank accounts, do auto investing, and other concepts as the world evolves. I think digital metals is going to become more and more relevant. But again, it depends on the right buyer and the right situation as well.
I love the way you started off by saying should. My staff did some research for me and tells me that there's 80 or 90 digital gold-related products. It is critically important, more important than anything else, that the owner of those products understand the sponsor and the manager. There's a lot of things about the gold market I don't know, but I do know that if you send money to somebody that you don't know who you trust, the probability of you losing that money is extremely high. So with digital products, knowing your manager, knowing their solvency, knowing their reputation is absolutely critical. I know, I can't tell you now, but I know that $200 or $300 or $400 million is gonna go to money heaven from digital gold scammers. This is absolutely positively going to happen. All of the features that you talk about make digital gold a wonderful thing. But digital gold is a concept. It isn't an asset class.
Right.
The people who sponsor the digital gold products are what you have to pay attention to, even more than the features.
Yeah, trust and confidence in who you do business with is very important. Look, we've seen the crypto space. I believe I've actually heard the number one stable coin that has failed in the crypto space is a gold-backed stable coin. And why do we think people did that? Well, gold's considered a safe haven. If you attach a safe haven reputation to a stable coin concept, people are bound to put money in,
Sure.
and they get burned.
Right.
So you do definitely need to be very careful who you do business with at all times, and do your research. And you mentioned earlier, consumers will also tell you a lot about a company. Check what the consumers are saying. Do your due diligence before you make any investment. And whether that be physical, ETFs, or even digital, always know who you're doing business with.
Correct.
Well, Rick, we've really hit on a number of different topics today. Everything from how people should look at their portfolios, what kind of products they should own, and a number of other items that were very insightful. Thank you for coming out here today and sharing your insights, and great to have you.
It's been a pleasure, and I really enjoyed the tour too. Thank you very much.